Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Setup Sunday. Let's take a look at some charts, break it down. Not much has changed, honestly, week over week. This was a list I made a month ago of things to watch for into Q4. Most everything on this list remains on the wrong side of the equation here. Let me quickly hit on each of these. Liquidity, actually, in the green here, liquidity has broken out because of dollar weakness. Eventually that will be bullish for us. Certainly more bullish than bearish. It is certainly a tailwind and not a headwind. We thrive on liquidity. Everybody knows that. We thrive on central bank mistakes, governmental mistakes, aka printing a bunch of money, inflation. So if you're bullish BTC and crypto, you want more liquidity, weaker dollar, rates down. I don't think that's a surprise. US liquidity in the white just remains ranging. Maybe the most important of all of global liquidity. So we still have QT, not QE, and stablecoin market cap, stablecoin liquidity effectively, mostly Tether, mostly used as a real deal currency. So it's a bit of a red herring because you'd think, oh, more Tethers, more better, but not quite the case. At least not that, again, that's not what we've seen. We can argue this, but it's just math. We haven't seen the Tether prints translate into bullish alts, for example. One other thing on liquidity, there's also, if you look at the high yield bond market, aka junk bonds, aka appetite for risk, in general, appetite for risk and BTC direction tend to be correlated, tend to be one-on-one. Post-halving, we tend to see spikes in appetite for risk, appetite for junk, high yield credit instruments. Arguably, the ETFs pulled a lot of that demand forward. But it's good to see high yield credit making higher highs. It's one of the more bullish charts. It's a bit wonky to think about and discuss, but this video is going to be just back and forth between legacy and crypto. But so this is a good sign. TLDR, a great sign to see risk appetite picking up. This does not look recessionary at all to me. No one is concerned about junk bond debt, corporate whatever, blowing up. That's not what we're seeing in HYG based on the price there. US interest rates remain at 5.25 to 5.5 this week, Friday. The single most important event of the week will be Jay Powell speaking, Jackson Hole, 10 a.m. Almost nothing else matters this week until he opens his mouth and we see how dovish he is or how hawkish he is or how forthcoming he is with discussing rates in September. Currently, the market expects a cut, a 25 basis point cut in September. It's best for volatility, both up and down, if the market is expecting normalization cuts and not panic cuts. Goldilocks cuts, soft landing cuts, not hard landing cuts. So we'll see what he says about all that. But that's Friday, 10 a.m. Eastern. Dollar strength. Pop on any trend metric you want. DXY. It's going to tell you most likely we are ranging, but we are still on the bearish half of ranging. Again, this is what we want to see if you are bullish crypto. We are inversely correlated with DXY. Historically, DXY below 100 would likely mean BTC to 100K. Something to watch for on Friday. What does DXY do relative to what Powell says? Powell can say anything he wants, but what do the markets read that as and how do markets react? So watch DXY, watch bonds, watch the 2-year, watch TLT. I'll take a look at TLT. Watch gold, and obviously BTC, everybody's going to be watching to see, does the market interpret Powell's words as a mistake or not? Regulatory risk. We, of course, have a U.S. election. November, Harris had a little honeymoon, and her odds spiked up quite a bit. Then she opened her mouth, started talking about policies. Odds came back down. This week is the Democratic Convention, so we'll see what comes of that. But something else to watch this week would be how BTC reacts to whatever changes in odds occur here. Looks to be fairly neck and neck, even though this is what people think is going to happen, not what's going to happen, right? This isn't predicting the future. It's just betting on what we think might happen in the future. Geopolitical risk, obviously, Ukraine and the Middle East. Let's check in on that, shall we? Well, Hamas rejected a ceasefire in exchange for hostages, so nothing better there. Last I checked, the U.S. just sent $20 billion in arms to Israel. So that doesn't look to be stopping anytime soon. Let's check in on Ukraine, Russia. Ukraine invading Russia, a weakly defended or undefended area of Russia. Doesn't look to be cooling down anytime soon in that region. The end game for both Israel and Ukraine probably is going to be something like another demilitarized zone, similar to what we have North-South Korea. You're going to have demilitarized zone between Ukraine and Russia. You're going to have something in Israel and Palestine, but we are far out from that as of yet. So overall uncertainty is still all over the map. Certainly not decreasing, but a few things are headed in the right direction. Dollar is weakening, rates are likely coming down next month. Liquidity is already increasing, and regulatory risk is a large question mark, but the more both candidates open their mouth, the less people want to vote for either of them. As far as ETF flows, over the past few weeks, really a bunch of nothing. And I wouldn't expect any of the technicals that I'm going to talk about today. I wouldn't expect those to change. An object in motion stays in motion. An object at rest stays at rest. If there's no momentum, if we're range bound, not much is going to change that unless the macro side of this equation changes dramatically, which we should see into Q4. So the flows being basically zeroed out here, not really that big of a deal. As far as ETH is concerned, a lot of people expected inflows for ETH. I don't know why. That's just, nobody cares about ETH, sorry. People in crypto barely care about ETH, let alone people outside of crypto. That may change one day, but that day is likely not anytime soon. And you're seeing that people vote with their feet, buying ETH or not buying ETH in the ETF. And I'll cover the rest of these. The other one here, unlocks. We've still had just a nonstop unlock party for US government, for GOX, Genesis, Germany, goes on and on and on. The farther out we get from these events, the more likely they are to be absorbed. But by the looks of price, it's obvious. We're still dealing with these unlocks. Whether it's evident on-chain or not, the market is still absorbing that information. If we look at where we are in the cycle relative to the previous cycles, we are in the wheelhouse of the nothing zone. This is where nothing happens for the next 60 days into Q4, and the election is somewhere around here in the vertical there. So as I rub the crystal ball, I'm foreseeing a lot of nothing for the next several weeks until we get some momentum back on the table. The quarterly returns, no secret, for BTC and ETH have been not great. This is actually the worst Q3 for ETH since 2019, despite having an ETF. We all know August, September, not great for Bitcoin either. Wake me up when September ends. September is also not good for tech, for NASDAQ, QQQ. September, one of the worst months for that legacy side of things. So I wouldn't expect a miracle here anytime super soon, within the next 6 weeks. Before I go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to US and US territory customers by Payward Ventures Inc., PBI, DBA, Kraken. Gold's been doing decently well. It is at an all-time high. The issue with all of this TradFi stuff, as we're all just these dopamine monkeys just tapping the green button, these things tend to happen relatively slow compared to crypto. The moves are not as big, not as large, obviously. But in times like this, when nothing's going on the crypto side of the equation, gold looks attractive, fixed income looks attractive, depending on how much you want to trade in and out of your positions, taxes, allocation, down the list, blah, blah, blah. But from a trade perspective, PAXG has looked good. Mentioned this for a couple weeks. This is the gold stablecoin, GLD. There's leverage products. There's leverage ETFs. There's all sorts of other stuff other than spot you can participate in. But just as an example, on Kraken, on the crypto side of things, you can access this, should you so choose to do so. And as far as Bitcoin, well, we had quite the couple weeks here. I'd certainly prefer if last week's candle that just closed a few minutes ago closed green and not red. It is what it is. Last week's candlestick is indecision, spinning top. Week before that, Dragonfly doesn't really look like much of anything. It's not quite at the bottom of the range. It's almost to the middle of the range. There's no there, right? There's just nothing here. Very hard to quote unquote predict where this may go. We can go to the daily. Is there anything on the daily? Well, there's a wedge. Not a fan of wedges. Broadening wedge, right angled wedge, megaphone, all that fun stuff. Smack dab in the middle of the range. Tried for a low time frame inverted head and shoulders over the weekend. That failed. Maybe this is a low time frame bull flag. Maybe. It's just, there's just nothing going on, you know? So it's hard to read anything on the low time frame seriously when we're dealing with this massive mega range still. We really won't be bullish. We won't see momentum come back until we're back to the top of the range or the bottom of the range. And the range traders may end up winning again, but as this widens out, it just becomes harder and harder to take seriously at the top or the bottom of the range because you just never know, right? Is this going to bounce? Is it going to keep going? You could say that for the top or the bottom. We're below the daily cloud, have been below the daily cloud for a good long while now. By default, that's just bearish. It is what it is. It's a litmus test. It tells you the upcoming signal, eventually, when we're back above the cloud, that it's go time, but don't expect anything constructive where price currently sits. We may pop to 250K from here. Okay, that's not what the cloud is saying. The cloud is saying the momentum, the trend sits bearish today. Check back tomorrow. Expect lower lows over higher highs. That's it. Is this a diamond top, diamond bottom, head and shoulders? Like, it could be anything, really. It could be anything. And I think the market is also confused as far as what's going on here. The chop continues. The earliest I'd want to do anything at all would be the 8 hour. If we can close fully above the 8 hour cloud, bullish. You can see May 13th, July 15th-ish. These ended up going nowhere, but that would be the first trade I would consider. And we came close to that, but not quite. So we're still not there yet, but it's something to watch throughout the week. Basically, if we can hold above 60K, that would be ideal. As far as the moving averages are concerned, we're below the 50, the 140, and the 200 day. The 140 day is the 20 week. The 20 week is historically very important at determining high time frame trend. Do we have to go to the 200 week? No, but there it is. It's on the chart. It's around 38, let's say. Similar to being in a club after midnight, nothing good happens below all of these moving averages. Okay. So again, this is telling you, do not expect bullishness until these moving averages cross bullish again. This is a death cross. Wait for the golden cross. Wait for the 50 as support instead of resistance. We're not there yet. Again, this could take 6 weeks into October. Sit tight. You're better off, most people, doing absolutely nothing. You can see this convergence in Q4 2023 of moving averages. That would be something to watch for in the future. But as we sit here, there's zero expectation for bullishness. Looking at some of the other analogs for BTC, this is CME futures. This chart is actually a little cleaner than the spot Bitcoin chart. We do not have a death cross on the futures chart yet. We are below the yellow line, the 20-week moving average. We're also below the cloud. So losing the 200 on CME futures would probably be pretty bearish. The death cross here could also be pretty bearish, just something to watch for in the next couple of weeks. The 200 weeks all the way down here at 30. Not an expectation by any means, but that's where it is. Futures look maybe a little bit more head and shoulders-y and less wedgy, but other than that, obviously still a descending channel there. MSTR also probably a stronger case for head and shoulders here. At the 20-week, doesn't have a death cross in the cloud, so it's mixed. You know, if any one of these starts to pull up above the others, that's a divergence to watch for, to think about, but no real slam dunk arguments on the bullish camp, at the very least, for either of these charts. And then as far as miners, into the end of last week, there was some positive positioning news regarding Druck, maybe PTJ on some of these miners, specifically WULF. Low time frames, Adam and Eve attempt, W double bottom attempt, but until it's back above the cloud on some reasonable time frame, it's hard to take this seriously. But there was obviously a lot of follow-on people trading based on those 13F filings. Most of the miners have some case of an attempt here. Some better than others. WULF probably the best. Cores actually also looks pretty good. But anything that doesn't look as good as this or close to this is probably just a massive avoid in the near term while Bitcoin is chopping around. And for ETH, it doesn't get any better. Below the cloud, death cross, far below the 20 week. It actually tapped the 200 week, which I didn't even realize. And didn't hear anybody talking about. 200 week down there at 2250. Thus far, no momentum here whatsoever. You can see the difference. This was bullish. This is not. Okay. This may be the bottom. The bottom may be it. But as we stand here today, trend metrics are not suggesting bullishness. Neither are gas prices, which suggests nobody's here. You could say you're using a layer 2. Great. I'm proud of you. But that is not translated to layer 1. Fees very, very low. The dirty little secret here is, of course, the chain wants high fees. It wants to burn more ETH. So to see fees this low just says nobody's here. Nobody's here. Or just the whole world's here using the world computer, and it's just so efficient that fees are this low, which I don't think is the case at all. ETH is also flirting with losing the 1 year moving average. Did something similar in 2019 into 2020. It's tough to know, is this going to be an extended time below the 1 year, or is it just going to be this flirtatious dance below the 1 year moving average? I think this indicator is worth watching into 2025 because it's done quite a good job at giving you some heads up of where the top would be on ETH. Currently, that's around 12K, but that may take a long time to get there, and ideally, the longer it takes, the better. But I don't want people to hear me say 12K and think their position is going to be safe here. This could go to, who knows, right? It could go to sub 1,000 at this point. That's definitely not impossible. Something else I was watching was the log curve zones. If you can pull it up on TradingView. Also suggestive of a value area down here with a bottom support around 2,000. But this could fail. The 1 year moving average could take a year to play out again, and you could just be stuck in this position for an extremely long time, and none of these trend metrics look bullish here. So take that for what you will. Sol, much of the same, below the cloud, below the 50, the 140, and the 200. Certainly no expectation of bullishness until it can recover back above all these levels, just as it did in Q4 2023, using everything as support, including the cloud. The 200 week moving average is at 66 for Sol. Still very much in the range. Similar to MSTR, it actually looks very similar to MSTR here. There's a case to be made for a potential triple top, but until this breaks below the range, you can't really say with certainty that that's what this is. Lots of chop there, really nothing to do whatsoever. Coin similar to MSTR, chopping around, 200 day as support, below the 50, below the 140, below the cloud. Certainly looks maybe the most bearish, just because this triple top potential is looking pretty real. So it's like, yeah, you could be bullish about products and retail coming back and fees and stable coins and whatever, right? But ultimately that hasn't quite translated into the chart here just yet. From a technical perspective, that basically would be 240 where things would start to get bullish again. But as it sits here, this is bearish for sure. Then you've got stuff like Total2, Total3, others, all that stuff is bearish. Just is. Doesn't look good. Maybe you form some sort of mega inverted head and shoulder, head, shoulder into Q4. I'll be right there. We'll talk about it. But as we stand here, there's nothing going on. I'm laughing because another video is quite sad, maybe boring, but I'm honest. You know, there's nothing else here to do at the moment. Total2 over BTC, including stables, also hasn't been wrong. Hasn't tried to fake you. No cap, as the kids say. This has been bearish for a few years now. And really the lesson here is for alts, there was a short time window post-halving where alts do well, but not in a bear market and not before the bull market, because then you're just flat. So we're not even to the flat part yet. Ideally, you want Total2 to look like TLT. TLT has a fresh bullish breakout on a high time frame. You sort of have to adjust to your reality because TLT is not going to move quickly. It's going to move slowly. Same thing with gold, but this is the type of chart you're looking for. And we're nowhere close to this for Total2. So alts have time on top of time to chop around, to go lower, to get angry, whatever. It's just not the time. It hasn't been the time. Total2 looks amazing. AGG, US Aggregate Bond ETF, also looks amazing. Clearly inverted head and shoulders there. Clearly looks like, to me, it's ready to bust higher on positive momentum, depending on how you want to measure this. Plenty of room. Plenty of room. SHY is another one, the 1 to 3 year Treasury Bond ETF. Looks great. Triple bottom. Nothing in crypto looks like this. BTC doesn't look like this. Everything in crypto, for the most part, looks the opposite of this, right? Everything in crypto has a triple top potential, whereas all these fixed income risk off products have a triple bottom ready to bust higher. It's going to be interesting to see, again, on Friday, what happens to charts here with all these looking bullish on technicals, and can BTC break higher if these also break higher? That's, I guess, something else to watch. What do the correlations look like on Friday, assuming Powell says something in regards to rates coming down? Looking at the S&P, strong bounce, very strong bounce. I don't think the trend people are happy because it stopped them out and then bounced basically shortly thereafter that. Dip buyers very happy. Money on the sidelines that bought very happy. This chart is a mess, but on the daily cloud since mid 2023, every time you had a bullish TK cross with price above cloud, that was a no joke, no doubter bullish continuation signal. So we currently don't have that yet, but it's something to watch for over the next couple weeks, probably into Q4. Breaking new all-time highs, also very significant, but just like it did in May 23, it could take a while to break higher. It doesn't need to just shoot through that level. But if it does, we're talking about 6,000 plus on the S&P. And again, what is the correlation with crypto? Do we still have sellers coming out of the woodwork selling decade-old coins, or do we finally start to correlate in a positive direction here? But this looks like it's setting up for another round, a fourth round of bullish continuation. And when I talk about bullish TK cross price above cloud being the go signal, I mean, this is why, right? It's not about the losses. The cloud doesn't care about that. You as the individual do, but the cloud is just telling you, yeah, now's a good time. Now's a good time. Now's a good time. Now is almost a good time. We don't have that on crypto yet. Crypto does not look like this at all. Q is a little interesting because on the weekly, they did tap the Kijun on the weekly. They also tapped the old cup and handle target at 500-ish. I half wonder if we will see a push to 570, which would be the top of the old cup and handle target. But the Q's got a massive bounce off those lows. So did BTC, to be fair, but we haven't seen follow through on BTC yet. Another one to watch is TQQQ over BTC. TQQQ is triple Qs, 3x triple Qs over BTC. And this has gone basically nowhere for a couple years. So it would be good to see TQQQ losing to BTC, because if you're looking for risk and you weight these equally, or you weight BTC as more risky on the risk spectrum, and it's not providing you extra return, what's the point, right? There's no point. You're going to stay with TQQQ or QQQ or NVIDIA or whatever, or SMH. We really don't have the momentum to attract more dollars yet. And it's a bit of a chicken and the egg problem, because without more dollars, how are we going to get momentum? Without momentum, how are we going to get more dollars? But this is one to watch. If we start to see overperformance for BTC relative to leverage products, relative to tech, relative to S&P, then it's going to be easier to break out. But as we stand here, flows are weak, momentum is weak, and we're just doing a whole lot of nothing. We're just chopping around. A few other individual names. Of the Mag 7, Meta, to me, looks the strongest by far. I don't know what this price action would be as a chart pattern, but trend-wise, it is back at the highs. Cloud loves it. Almost as a bullish TK cross here. Almost none of the rest of the Mag 7 look like this, look this strong. This is very strong relative to the group. KWEB is another one. I'm kind of showing these as examples of what to look for on lows for alts, if anything. Despite even coming to the terminus of the bearish cloud, KWEB still has not broken out yet. This is Chinese internet ETF, but it looks like it may start to pull up more. I don't know. I like it more above 30. But again, alts are nowhere near anything close to this as far as forming a bottom. And you can see 2019, 2020, maybe a little bit of a Wyckoff triple bottom situation here before the move higher. But most alts certainly don't look bottomy like that, and they certainly don't look like PayPal. Again, another junk company. I keep bringing it up week after week after week because this is my trading style. I just hunt stuff until the time is right based on trend metrics, and the high time frame trend metrics here are starting to break up. So maybe this is the market saying these smaller cap companies may start to do well. Square is another one to watch. Toast. They may start to do well if rates come down. The technicals here are certainly leaning more bullish than most of crypto. So if you're looking for stuff to trade, There's plenty of options in the risk-off realm. There's plenty of options in the smaller caps, in tech. The last thing I would want to do right now is try to force a trade in crypto when there's nothing there. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.